Hi, welcome to the Market Alert for Thursday, the 7th of September 2023. So stocks and bonds slammed on stagflation scares and tech tumults. So soft survey data is showing price pressures rebounding, and hard data shows growth is slowing. Smells like stagflation to us, according to this headline. Stocks and bonds fall after hot ISM data was released yesterday as well at 3 p.m. Did come out slightly warmer. If we just have a look here, we'll go back a day and you will see that it came out at 54, previous 52.7. Economic news for today: unemployment numbers, weekly claims from the US, and then FOMC Harker is going to be speaking at 3 p.m. Okay, let's have a look at the markets yesterday and continue to move to the downside. So let's kick off and have a look at the Dow. So in the Dow, we can see that we're heading down to the 78-89% retracement from here, projected back. We're down on the overnight as well, nowhere near yesterday's low just yet. But this is going to continue by the looks of things and the feel of things. This is the third or fourth day, isn't it, now that we've seen this, where the US has opened in the afternoon and then the market has just slowly declined. We traded down to the S3 yesterday. 90+% of the time the market will stop in this area. That's precisely what happened. And at the moment we're currently just below the close, below the DP, which is a bearish indication unless we can get the prices back above this area. Otherwise, an attack on yesterday's low is already on the cards, which you can see there in the daily chart. That low was also tying in with the 78% retracement as well. Moving on to the German DAX, also continuing to move lower. Yesterday we just took out the low and we came back. It's that 15,700 level, which we'll look at in more detail in just a moment, that held the market during yesterday. And we've got this fib retracement of 78 and 89. If the 78 is taken out, then we head down to the 89. But there's no positive news around at the moment. And this is not uncommon. This time last year we started to see the decline of Liz Truss, or Liz Truss was just coming into power, and then lasting 45 days when they sold £78 million worth of pound futures into the market to destroy any sort of reputation that she had and remove her so that the World Economic Forum could get their man, i.e. Sunak. So we have an unelected official in the Downing Street residence at the moment, but that's another story. So anyway, the bad news continues again. It seems to be the case, but then we get towards the end of October, then we start to see the Santa rally. That's the seasonal pattern. So yeah, the 30-minute chart of the German DAX, you can see how that 15,700, that psychological level there, despite the fact that they dropped it down to the low, you can see how the market needed to come off that level, and we're back there at the moment. Well, not quite, it's just down here at 15,674. So we've taken out the 15,700 level, which has been an important one for the market. So that's now been removed. So the market's going to certainly have a go at yesterday's low. Depends whether it bounces off this level though when it actually reaches it, or we continue down and head down towards the S3 in the German DAX. We'll just have to wait and see. There's no news, so the market's going to have to make its own direction. In the S&P 500, big move to the downside yesterday, down to 50% retracement, and also the 50 EMA. The market needs to hold at this level. 30-minute chart, straight decline, and a bit of a bounce before the end of the session below the DP, below the close, heading towards the low. We can take the psychological level out at this area, which is 4,450, I should say, at this blue line. In the FT100, also an interesting day, not as down as much as the rest of the markets, but certainly playing catch up overnight. Market coming off the 50% retracement yesterday and also above the 20-bar moving average. In the 30-minute chart, you can see that we traded below the low and the S1. The market then had some stopping volume, and before you know it, we're back up, and the market held really well for the FTSE during yesterday, which you can see there, just below the DP now and the close, and it will need to hold at the 7,400 level. Failing to do this, we'll see an attack on the S1 and the low. The US dollar continues to move to the upside. This isn't over by a long shot. This is going to continue. It's having a major impact on the metals. As I've said, since we hit the top, they were going to smash this market. They haven't finished yet. They're going to take out these lows. You're going to get another solid down day today, as this market is going to be unrelenting going forward. We're not going to stop until we get down to $20. Said this before, we've had bounces. We're going to continue to see this market absolutely crushed. This is what they want to do with it. They want to keep this metal price suppressed, so that there is cheap silver for the solar industry and all of the net zero crap that we're seeing around us at this time. So you can expect more of this to the downside, and like I say, $20 or below. In the 30-minute chart, every day without failure, LBMA and the spot markup is to the downside. Same with gold, but in less severe, as you can see there. And the 30-minute chart, again, same thing, bit of news, or the spot pricing in London, the London fix as it's known, then the market's crushed. Okay, that's it for the metals prices. Let's have a quick look at the gold-silver ratio before we finish. And what a surprise, as I said, we're going back up to this level or higher, probably towards 90. So 83.08 at the moment, straight up. It's going to continue. There's no doubts about that at the moment. They're hell-bent on keeping this price, the silver price, suppressed. Any chance of a move up at the moment is hammered with paper money, despite the fact that the ratio for out of the ground is something in the region of 10 to 1, whereas we're looking at 83 to 1 in the futures market. That's how much the game is rigged. Okay, that's it for this one. If there is anything to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next.